Good day, ladies and gentlemen, to the quarterly update of Fortuna Mining and Discovery Silver here on Commodity TV. Silver continues to advance, even if it's currently consolidating somewhat. Interesting in this context are China's physical silver purchases, which reached over 250 tons of silver in Q2 2024. What's going on here? On the one hand, there is no doubt that silver is being stockpiled, as solar panel producers with a long-term perspective are keen to secure their supply. Because one thing is quite clear, in the 6th year of the silver deficit, by the end of this year, supply will get really tight. Silver is scarce and will remain so. China is preparing for this. Is the rest of the world, such as car manufacturers, also prepared for this? I think not so much. Silver will make a move and the next price targets are $38 and then $50 per ounce. Gold also continues to look very good. The buy signal was formed in August at $2,500. The next price target is $3,050 per ounce of gold. The higher prices are also reflected in Fortuna Mining's figures, which were very good in Q2 2024. Attributable net income was $40.6 million or $13 per share, compared to $26.3 million or $9 per share in Q1 2024. Adjusted attributable net income was $30.4 million or $10 per share, and cash flow from operations increased to $93 million or $30 per share. There was also free cash flow from operations of $38.6 million. The company issued convertible debentures with gross proceeds of $172.5 million, which were used in part to repay in full the $125 million outstanding under the revolving credit facility. At the end of the quarter, total net debt was $66.5 million and the ratio of total net debt to adjusted EBITDA was a healthy 0.2 to 1. Liquidity at June 30, 2024 was $355.6 million compared to $212.7 million at the end of Q1 2024. Production was 116,570 gold equivalent ounces, with gold production of 92,716 ounces and silver production of 990,574 ounces of silver. It is also important that costs remain in line and are likely to fall again. Consolidated all-in sustaining cash cost AISC per gold equivalent ounce sold was $1,656 compared to $1,495 in Q1 2024, and adjusted for San Jose, consolidated AISC was $1,584 per ounce. The company recorded no lost time in accidents and no total reportable accident this quarter. Also important is the focus on growth and development. At the newly discovered Kingfisher prospect at the Seguela mine, the company intersected 23.7 gram gold per ton over 17.8 meters. Exploration on the Diamba Sud exploration project continued with an intersection of 31.3 gold per ton over 12 meters on the Caracara prospect. Fortuna Mining is well on track, and the share has generated a buy signal. The next price target from the sideways formation from August 2022 to today is 15.5 Canadians. This means there's plenty of room for upside. Another company that could slide onto the takeover target list is Discovery Silver. This is because of the large mining companies such as Barrick are no longer growing themselves, as the quarterly report has shown. However, there are large deposits such as Cordero, which would fit in perfectly with large corporations, as they have the power to realize them, even if the politics are sometimes strange. A huge milestone are the positive 2024 feasibility study for Cordero with 302 million ounces of silver reserves and an expected annual silver equivalent production of 37 million ounces over the first 12 years at a low cost of less than $13 per ounce of silver equivalent. The leverage on rising silver and gold prices is enormous. The positive socio-economic effects on the communities and Mexico as a whole should not be underestimated. This would make a major contribution to the supply of raw materials in the USA for the e-car industry, but also for the US solar producers. After all, the silver would be practically on the doorstep. It would also create thousands of high-quality jobs and generate billions in investments and tax payments. Financing talks are in full swing, and there is probably enormous interest in the project. The project itself offers attractive returns with a net present value of $1.2 billion at $22 per ounce of silver, rising to $2.2 billion in year 4 when the project reached the final completion of 51,000 tons per day. The enormous leverage effect on silver prices is also impressive. The NPV increases by 50% to $1.8 billion based on the current metal prices of August 12, 2024 at $28 for silver and $2,473 gold, and grows to $2.8 billion in year 4, which is 4.6 times the original capital expenditure. Politics or not, there are significant benefits to Mexico with a total investment of $1.4 billion, including an initial investment of $606 million. The creation of 2,500 direct jobs during construction, peak employment of over 1,000 direct jobs during operations, an estimated $4 billion worth of goods and services purchased, and expected tax payments of approximately $1.9 billion in Mexico at current metal prices on August 12, 2024. A third-party review of proposed environmental practices has been initiated to ensure compliance with industry-leading standards. $130 million is planned for the remediation and restoration of the site. Significant investment will also be made to promote green energy sources and provide infrastructure and technology to improve water treatment, with reclaimed water being the main source of water for the project. The company has approximately $37 million in cash as of June 30, 2024, which should be sufficient to get the project financing package then done. A first price target in the pointed figure chart is 2 Canadians, followed by 2.75 Canadian dollars. You can also find all the information on our Commodity TV app in German and English, as well as everything to do with commodities. We look forward to your like, and more important, please subscribe to our TV channel. Please note the disclaimer. The shares discussed are part of the SFC Mining Special Situation Certificates, and I am shareholder of the companies. Thank you for watching us, and bye-bye from Switzerland.